What is it that you're expecting GDP to come in at for both the September quarter for India and for FY13?
The economy is growing at around 5.5% year on year at the moment, and we think that the September quarter number will be around that. We've penciled in 5.6, which is slightly disappointing. This is well below India's trend or long-run potential rate of growth. The problem really that they have is that business investment and business confidence is way down, and that is dragging on the broader economy and on hiring and GDP growth more broadly. So they're growing at around 5.5%. The medium-term view over the coming quarters is for, I would say, around that rate, maybe a little better. It looks as though we're near the bottom of the cycle, but I don't see anything either externally, domestically, within the policy environment that could lift the Indian economy back to its long-run potential of 7.5% where it was growing just a year ago. So perhaps we're at the start of a slow cyclical upswing. The numbers might start to look a little bit better, but they're not going to be a whole lot better than we've seen.
Glenn, but for the calendar year 2013, is it time to be more bullish than bearish? Because the general consensus on the street is that global commodity prices will come down, and if global commodity prices indeed they come down, that will benefit Indian economy, because India is a consumer-driven economy and it is still dependent on imported commodities.
I perhaps wouldn't. I'm not a commodity expert, so I'm not going to fathom a guess as to where prices are going to go. I don't think this is the big driver of the Indian economy, either now or in recent years. I mean, sure, if oil goes back to $150 a barrel or more, then that certainly that raises the cost of living, raises the cost for consumers, squeezes the government fiscal deficit. Undoubtedly, that's a negative for India. But I think there's more important things driving India's economy right now. The external situation is still very pertinent, but I think domestic confidence and a pro-business, pro-reform government, of which we've begun to see signs, these are the sorts of things that could drive better Indian growth next year.
So Glenn, what according to you, or rather which sectors would actually lead India's GDP growth, say, over the next 2 to 5 years? Would it be manufacturing or services? And how crucial is manufacturing growth for India, because that has been the weakest link the past couple of quarters?
That's right. Manufacturing in India has underperformed for years, and the recent performance, recent couple of quarters, has been no different. I do not see that turning around anytime soon. I think these deep-seated infrastructure problems, electricity shortages, difficulties with roads and rail and ports and so on, as well as things like the labor laws, which certainly cap any large-scale manufacturing, because as soon as your company gets too big, you get hit with a bunch of very restrictive and hobbling laws over what you can and can't do with workers. I can't see any of these factors really changing anytime soon. It would be nice if India did have a low-cost manufacturing base that they could, I suppose, follow the East Asian model of economic development and export your way to prosperity. But I just don't see that happening. So I think sectors like services will continue to be important. I think construction may start to lift. The government is doing, continues to do some nice things in that area, but it would be good to see the private sector get on board. I'd say these are the most important sectors over the coming 12 months.
Well, I appreciate your time and thank you for your insights.